The average price for a gallon of gas briefly falling below $3 on Christmas. That's the lowest cost on the holiday since 2020. Prices on average have been on the decline in the past 5 months. That's according to Gas Buddy. For what's next for gas, energy, and oil in 2025, let's bring in Patrick DeHaan. He's the head of petroleum analysis at Gas Buddy. Patrick, great to have you with us.
Yeah, good to be with you.
What sort of surprised you is your prediction that WTI would actually be lower by a couple dollars or so. What are the dynamics behind that?
Well, there's going to be a lot of cost pressures on WTI and oil prices in the coming year. And make no mistake, I think it's well known right now, President Trump's drill, baby, drill mantra. But there's a lot of other question marks surrounding OPEC. They've obviously been cutting production continuously since 2023, kicking the can down the road now to April of 2025 to resume that oil production. So there's about 5 million barrels of spare oil capacity globally, and that's keeping the lid on oil prices currently. We expect that will likely continue into the new year. In addition, the Chinese economy, which may be turning away from oil as they accelerate their EV transition, is likely to see a lower demand for oil in the year ahead. So overall, the price of oil, we're expecting it to be modestly lower in the year ahead. There certainly are some risks with the potential of tariffs, but at least on oil, I think things will be pressured, especially when you consider that OPEC spare capacity that lies dormant for now.
How should we factor in the administration and their sort of push for less regulation, fewer cost fees, et cetera, for producing oil and gasoline? I mean, how does that factor into your forecast for gas products and sort of the downstream?
Well, especially for the midstream and downstream, pipeline operators are probably going to have a more conducive atmosphere for more mergers and acquisitions. Even on the upstream, you could see a little bit more consolidation, as well as the downstream towards retail. There's been a lot of talk of major acquisitions at C-store chains in the past year. I would expect that to accelerate. And so I think for the midstream and downstream, the future is rather bright. In fact, downstream retailer margins have been above average ever really since the COVID pandemic. So midstream operators, pipeline operators, and C-stores themselves are likely positioned to take advantage of what could be a very positive environment for doing business. Of course, those risks aside, there's a lot of, as you mentioned, deregulation likely coming, a more fruitful environment for some of those mergers that potentially have been waiting the last couple of years.
Patrick, only because you brought it up, OPEC, are they even really something we should pay attention to anymore? If you look at the U.S., Brazil, and Canada, they basically produce the same amount as OPEC. So in a lot of ways, we've circumvented what OPEC's reliance used to be. And with China sort of, as you stated, pulling back, with most of Europe in recession, is it really even something to be concerned with?
Well, I think there's a lot that we're keeping an eye on. But when you come to it, OPEC's relevance likely has been reduced. I mean, they're continuously fighting lower oil prices today, WTI at about $70 a barrel, really struggling to get anything above that level and hold it. And we still have this potential of OPEC increasing production again in April of 2025. It would not surprise someone if they continuously push that to July or potentially all the way to the end of 2025. But as you mentioned, Canada's producing more. I think there's a lot here with the mix of potential tariffs that Trump has threatened to put on Canadian and Mexican crude oil of up to 25%. How the door could open then for potentially a Keystone XL pipeline to be resumed if TC Energy even wants to see something like that. So there's a lot of potential wild cards here, but really ultimately, I think next year could be a bit more of a struggle for the upstream than it would be for the downstream.
So given all that, Patrick, what's your outlook for gas prices at the pump next year?
Well, I think an environment which is going to be weaker for crude oil is likely to deliver good news for consumers. In fact, next year, while we put our final numbers together, it's looking rather optimistic that aside from some of these risks, the talk of tariffs or unexpected geopolitical tensions, that broadly speaking, U.S. consumers are going to face a 2025 with relatively lower gasoline and diesel prices. And that's good news for companies like airlines as well. Any large end consumer should be fairly happy, the environment we are looking forward to in 2025.